Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. As we all know that there was a big rally on the chart of gold yesterday. Glittering gold gives market some Christmas cheer. And the main reason was the Bank of Japan's decision to widen the trading band for 10-year government bond yields. And there was a huge drop on all the JPY pairs. All JPY, USD JPY, Euro JPY, all JPY pairs saw a huge drop because of the sharp rise on the Japanese yen currency index. And gold also saw a very much up move. Okay. Right now, gold is trading at 1815 level. This is the current market price of gold. And if you look at a chart of DXY, then as per our expectation, DXY is still trading under this wedge only. Okay. And I don't think so that market will be going for a big trend reversal before the Christmas or after the Christmas. Okay, so there's a good possibility that market will try to remain within this range only. The range of 104.90 105 on the upside and 103.20103 on the downside. This is the range for DXY right now. Though there was a sharp rally on the chart of gold yesterday, but gold still failed to cross the previous high of 1824 here, and that was a very important high made by the gold few days back, and gold needs to cross this high to resume the uptrend. Because if you look at the weekly chart of gold here, this is the weekly chart of gold. You can see that gold is still trying to cross the weekly resistance here but unable to do so. So if gold really wants to go higher, then it will have to cross the weekly resistance. Then only we will get the confirmation that yes, it's time for gold to go higher again. And one more thing, if we observe the present structure of gold, then we can clearly see that the structure of gold is forming higher highs and higher lows. To maintain the structure, okay, to maintain the structure, gold needs to cross this particular level here, the level of 1825. Once gold will break 1825, settle above 1825 for a couple of hours, we can go for a buy position. But at first, gold will have to cross 1825 so that the resistance will become the new support on the chart of gold. And if gold fails to break the previous high, then the structure of the market will change and it will be something like this. Because whenever we see a market going up, forming higher highs, and at one time when the momentum of the market reduces, then market fails to form higher highs and usually the structure changes. So if gold also does the same thing, if the momentum is going down, then obviously we will see trend reversal on the chart of gold after a few days. Okay, so gold needs to cross this particular level here to maintain the ongoing structure right now. And today, okay, as we can see that right now gold is going down. So if gold breaks also this particular resistance of 1825 today somehow, okay, then do not take a buy position at the breakout, because again I'll say Christmas is around the corner. The volume of the market has already reduced and it will reduce further in the coming days. So as a result, be careful while placing any buy position at breakout or any sell position at breakdown, because for a proper breakout or breakdown we need volume. So if gold breaks also 1825 level, do not take a buy position immediately. Wait for 2 hours, 3 hours, 4 hours, observe the market and see how the market is reacting. If you see that after 3-4 hours market is trading comfortably above 1825 level, you can consider taking a buy position with proper risk management. Yes, do not do not gamble with your hard-earned money right now. And on the other hand, if gold starts coming down, because as you can see that gold is coming down slowly, okay, so during the day, we will have minor supports on the chart of gold, okay, where you can consider taking a buy position, because the actual and proper support levels are quite far away. Okay, because the first support will be around 1790 level, which is in the form of the trend line, and 1790 is quite far away. Okay, this is the proper resistance on the chart of gold. If gold comes down, you can expect 1790 to act as support. If gold bounces from 1790, definitely you can consider taking a buy position. 1790 is a proper support. Then we have got 1775 as a very strong support on the chart of gold because of previous price rejection as well as Fibonacci. I have already shown in my previous videos. Then we have got 1766 to 1766. Already I have shown in my previous videos the importance of these levels. These are some proper supports on the chart of gold, whereas 1825 is a proper resistance on the chart of gold. But during the day, okay, during the day, there may be some small minor supports where you can consider taking a buy position as well. But be careful. Okay, be careful. You must understand that not all the levels have the equal amount of strength. So, see, the amount of strength on 1775 and the amount of strength around 1810, 1805 is not the same. 1775, 1750, those are strong supports. And for day trading purpose, what you can do is you can simply use the Fibonacci, because right now I am using the Fibonacci to find out support levels for day trading purpose. So the first support that we have from Fibonacci is around 1810 level. Okay, 1810 to 1808. As you can clearly see, the reason behind considering 1810 to 1808, wait, let me write it down again clearly. 1810 to 1808. This is our first support for day trading purpose, but keep in mind this is not a very strong support because we need some levels for day trading. Okay, that's why we are using the Fibonacci in this manner. So 1810 1808 is a Fibonacci 23.6% retracement level, as well as this is also the previous swing high. So previous swing high will now act as the new support for the market, as well as it is also the Fibonacci 23.6% retracement level. So when market will come down to this level, observe the market. Okay, observe the market. Keep in mind this is not a strong level where you can place a buy limit. If you see the market is trying to take support, market is taking support, market is forming a hammer pattern, market is forming a bullish engulfing pattern or showing good price rejections from below, you can consider taking a buy position 30-40 pips. In case market continues a downfall with a big red candle like this, okay, if you see market coming down with a big red candle like this, then obviously buying is out of the equation and in this level. Okay, so what you can do is you can wait for the market to come down to the next support around 1803, and we have the third support, that is the Fibonacci 50% around 1798. Okay, so these are the three support levels that we have derived from the Fibonacci for day trading purpose. If you're a swing trader, then obviously you should avoid taking buy position around these levels. You should wait for the market to come down to the lows of 1775, 63, or the trend line around 1790. For day traders, you can consider using this Fibonacci tool, but be careful, follow proper risk management, and try to observe the market. If you see market taking support, then only take a buy position. Do not gamble with your hard money. And secondly, if you see market going up, going above 1825 level, do not panic. Do not have the fear of missing out, FOMO. Wait for 3 to 4 hours and just wait and watch, because 1825 has become a strong level for the market. Okay, if market wants to continue the uptrend, it will have to cross 1825 as of now. Okay. And expert traders, you can consider taking a sell position also, okay, for quick sell position for some quick profit, but be careful. Beginners try to avoid. Okay, so this is it. My analysis can be wrong as well. Follow proper risk management. So be careful. Bye bye. Take care.